All year round, Frontier Home Products and Design has what you need to make your home comfortable and beautiful. Relax on a new timber tech deck designed by Frontier's experts. A new fireplace from Frontier Home Products Fireplace Gallery adds warmth and serenity to any home. Beauty and versatility at Frontier Home Products and Design Center, 4213 Peachtree, 5th next to the Bayfront Highway.
Frontier Home Products and Design Center. Discover a new frontier.
PA contractor number PA039007.
Get paid to drive. Start a new career behind the wheel at the EMTA. If you are looking for a high-paying and rewarding career with full benefits and paid training, stop by or apply online today with the EMTA. Plus, EMTA riders can now enjoy free Wi-Fi on new, clean, and environmentally friendly buses to travel all over Erie County. Visit ridethee.com for more information.
Get on board EMTA. Get on board EMTA. Get on board.
Welcome to TalkErie.com's Joel Natale Show, Erie, Pennsylvania's daily podcast. Every day, we tackle the biggest issues that the Erie PA region faces. Stay informed and involved as we advance the narrative of Erie. Now, here's Joel Natale.
It's our annual tax show, and we're glad to welcome back John Baker from Kingdom Tax Services. John, good to see you, sir.
Good to be here. It's that time of the year again.
This is the time where you are celebrating, right?
Oh, yeah.
And we've got Janie Hill. Did I get it? Which one?
You're really close.
Oh, my God.
Janie Hill.
Janie Hill. Oh, my
Yes.
gosh. I didn't write it down, Janie. That is the worst thing. But you are part of Kingdom Tax Services, too, so welcome.
Well, thank you.
We're a family show. We like origin stories. Did you come up here in Erie, or are you a transplant in?
Oh, this talk show does not have enough time for me to tell you where I've been.
Yeah?
Yeah, but we moved here about a year ago. My
Okay.
husband started preaching at East Lake Rhode Alliance Church.
Oh, very cool. I know
Yeah.
that church very well.
Do you?
Yeah, I do, yeah.
So ironically, John Baker's my boss and my husband's boss because he's the elder.
Exactly. That's awesome.
No pressure, though.
Well,
No pressure.
well, welcome to Erie, and you're diving right into taxes. What's your background with the tax part of things, you know?
My background is in banking.
Okay.
And my husband makes fun of me. I do have a certification in bookkeeping from 2011. I like to hang on my wall.
Okay, cool.
But yeah, I started a year ago and just kind of did the whole tax year with just doing the appointments and creating folders. And next thing I know, I'm running the tax department and bookkeeping and payroll and managing. Wow. And I think John just wants to retire.
I don't blame him at all. So, all right, we're talking taxes here. John, have you ever seen this situation where so much emotion with finance comes to bear over taxes? Probably if you were about to go bankrupt, that would be the worst thing. But this is second worst, it feels like.
It's interesting, Joel, because for some people it seems to be very emotional. Other people we have people walk in every day that said, I haven't filed for 7 years. So, I'm like, how can you sleep at night?
Yes, exactly.
But yeah, people do have a tendency to want to get it done and get it done as quickly as they can.
Yeah.
It's kind of interesting that even though it's not due till April, there are those who really want to get it done like as soon as they get all the forms, and then there's the others who don't get it done even by April. So,
what are the deadlines for the employers as well as for the other people in your life, whether it's like your mortgage lender? There's certain things that you have to get from these people, right?
Yeah, so most of the forms you get in the 1099s, the W-2s, all those are supposed to be out by January 31st. So employers have to get those out. Investments, some of them are due by 31st. A lot of them aren't due till the 15th of February because they just don't get the information fast enough. So those are the main ones that come out. Keep in mind that most corporate, like any pass-through corporation, like Subchapter S or LLC, those all have to be done by March 15th. so that they have time to pass through that information to the actual people that own it, so they can do their returns. And then of course April 15th is the big one we're all familiar with,
right?
Or whatever day they call it on this year based on holidays.
That's true. But it's rarely on the 15th,
rarely,
isn't it?
But yeah. So
well, that is quite interesting insofar as that the there are some folks that have simple tax returns that will be able to file within the first couple weeks of February, but it's almost like the system is set up to jam you up at the middle of April, isn't it?
Yeah, if you have any kind of investments or those kind of things, you're talking middle of March or beginning of March, anyways, I guess.
Yeah.
Before you're looking at being able to do it. So that's but a lot of people don't, and that's we have quite a few cases that have already come in that are completely. We have all the information already, so we can move forward with now. So,
and
so
Janie,
one thing,
I was going to say, yes, please. Yeah.
Yeah, I was going to say one thing that we're trying to do is be proactive.
Mm-hmm.
So we're sending out like invitations to come back. So to all of our 1,500 plus clients, we're sending them a portal invitation saying, how would you like us to work with you this year? And so my hope as the tax manager is to get them spread out between January, February, March, and April.
Right, yeah.
Not everybody come in March, and then have 10 preparers that are ready to do preparations, not have anything to do. So
I was going to say, can you see on a graph how it just kind of steadily goes up like a bell graph, where it really shoots up in April as far as the amount of work has to be done? Or
I wouldn't say it shoots up. I would say it's pages and pages of next.
Okay. Yeah. Wow.
I just find it interesting though that whenever there's a month change, we get a blast of people coming in. So as soon as it's actually February, you'll get a lot of people wake up, and then when it's March, people wake up, and all of a sudden,
it's funny. That's astounding. Let's talk about what is on the tax form these days. First off, is there such a thing that there's the easy or the 1040A where you could have a more simplified deal, or is pretty much everybody filing full 1040s?
Yeah, there's not a lot of difference now. The 1040A originally was without itemizing, and so as we were talking earlier, probably only 3% or 4% of the people in the United States itemize now. Yeah. So most people don't do that. They did make a couple of other forms, like there's a 1040 SR for seniors. There's the 1040 regular 1040, which is a longer version, of course. They have come up with a few versions that kind of cut down on some of the stuff that wouldn't be applicable to somebody in that age range or whatever. But the promise of a postcard-sized return has still eluded us at this point. It was kind of funny. A couple of years ago, they actually got everything down to the goal was to get everything down to one page 1040, which they did. Right. And then they created Schedule 1, Schedule 2, Schedule 3, Schedule 4.
Yes. Yeah.
Which we have to now use to explain what's on page 1. So, but yeah, I don't think they'll ever get down to that postcard one for a while. So
let's dig in, Janie, on this the special tax considerations for seniors, because I think that would be interesting, because we have a lot of seniors that listen to the show, right? Mm-hmm. And so I know that there's like all these crazy things with required minimum distributions, stuff that we've talked about in the past here, of course, and Social Security. Where do you put all that? So talk about all that.
Yep. So they're, one thing, when they're over 65, they get an extra exemption. So their exemptions, or their itemized deduction, I should say, it's not an exemption right now. Their itemized deduction's higher. So that's a plus for them.
And that's per person, right?
Yeah, and that's per person.
$19.50.
Yeah. And so, or a married couple, of course, is double that. And then, there's also things we have to look at, like we fill out people's tax rebate forms for them when we do their taxes. So anybody over 65 who's renting or has a mortgage pays taxes will get a rebate on that.
Okay, just a quick question. That has not slid up with the increase of Social Security full retirement age, or has it?
It has not, no.
So it's still at 65, even though the folks that are getting to be 66 and 67 are not eligible for full Social Security until now.
Right.
Yeah, I mean, until 67 now.
Yeah, the only bad thing is it's income driven. So if their income's too high, so if they haven't retired and they're still working at 66 or 67, they probably wouldn't qualify for it, even though
for a tax rebate.
Yeah, even
Got
though
it.
technically they would be, but
Interesting.
you're also dealing with seniors. You're also dealing with a lot more of the retirement type things. So people taking money out of retirement plans, or the charitable giving, where you can give money from your retirement plan to the charity, which saves a lot of money on taxes. Unfortunately, Joel, there's a lot of people out there that still don't understand the penalties and all of that. Every year, it's sad, very sad, but every year we get people in that said, well, I left work and I didn't know I had a choice, so I just took the $100,000 out of my IRA, or out of my retirement plan, and they're looking at huge fines and huge taxes. Whereas if they just spread it out a little bit, or rolled it to an IRA, they would have had to pay all that. So it's very important. People really need to check with somebody if they don't understand it, to make sure before they make any kind of big move like that, because it's devastating.
Also, there is heavy penalties if you don't start on your minimum distribution. Now, I just kind of scan some of this stuff. I'm hearing that you have to start at 70. I'm hearing that you have to start at 73. Is there a one solution to that dilemma?
Yes. So Congress passed a law 2 years ago, and it phases in an increase, and that's why you're hearing all those numbers. So it was 70 and a half. But now it's anywhere up to 75, depending on when you were born. So I think for me it's 73 or 74, and it will eventually go to 75 for the kids now. So they are moving that up to where they're forcing you to take money. That's the threshold where they force you to take money out of retirement plans, and the RMDs. So
right.
The other thing they changed.
Does that affect, when you look at your clients, are you seeing a lot of that?
Oh, yeah.
Of the
absolutely.
RMDs?
Yeah.
So that's pretty common.
Yeah. I mean, anybody over 70 and a half, really, you have to look for it. And, some of them, like I say, have a few more years there. But, and that's the money that, they typically are going to use for QCDs. If they're giving money to charity, that's where you want to give it.
Yeah.
Honestly, once you're
qualified charitable donation.
Right,
okay.
right. Once you're over 70 and a half, you should never give cash. You should always give out of an IRA if you have one, because it makes a huge difference.
Even the people that tithe to their church, are you saying
absolutely, yeah,
tithe the RMD, huh?
Yeah.
Holy smokes!
Yeah.
I bet you a ton of people don't understand that.
Yeah. Yeah, Ameriprise, just in our practice alone, Ameriprise wrote checks for over $250,000 last year going to charities out of our clients' accounts.
Wow.
But the reason it makes so much sense is because most clients, when they get to that age, don't have a mortgage. They don't have all the other itemized deductions. So even if they give substantial amounts in donations, they don't get to take it off because they can't itemize. Where if they give it out of their IRA, then it never hits their income in the first place.
Right.
So effectively, they're taking it off on the income side. And so, that makes a huge difference tax-wise.
I want to stay with senior tax considerations a little bit longer, John, because again, I feel like there's a lot of rabbit holes, a lot of places where you can get stuck. Folks that have decided or chosen to take Social Security early, but then they might make too much. I mean, my dad always had to worry about this, right? Because he never stopped working until 2 weeks before he passed. And he had he ended up having to pay the government sometimes.
Right.
So talk about those penalties and stuff.
So yeah, the I guess the worst part about the penalty is the way they take it, which is really bad. If you earn too much during the year, then they actually will adjust your Social Security the following year to take that money back out. You'd think that they would just lower it so much every month, but they don't. They literally stop your Social Security totally, until you paid it back. So it might, maybe it's 4 or 5 months before that's paid back.
Wow.
And then they restart your Social Security. So that's a little tough to eat that.
Sure it is.
And so it's a really kind of a tough situation. Generally speaking, you don't really want to take Social Security if you're going to be above the limits. And I think that limits, don't quote me on this exactly, but it's around 16 something. But if you're going to earn
16,000.
Yeah, that's allowed
it,
to
huh?
earn. Yeah.
Wow.
If you're going to earn more than that, then you need to hold off on the Social Security until you're past that. There's also a second penalty, if you might call it, and that's the taxation on Social Security. So even if you're beyond the full retirement age and you can draw Social Security and make all you want, the more you make, the more taxable the Social Security becomes. So you end up paying more tax on it too. So that's something to factor in.
Is it stacked in with your income?
Yep, stacked with all the rest of your income. Yeah,
Okay.
The actual formula is they take half your Social Security plus all your other income. If it's over $30,000, they start taxing your Social Security. Now that is one of the things that Trump wants to get rid of. So we'll see if that happens. But that because it doesn't quite seem right that they tax you for Social Security and then they tax you on the tax that they give you back.
Wow.
But that is the way it works right now. So when to take Social Security is always a tough question, and one that has to really be modeled out pretty well, because you have to take into consideration the taxes. You have to consideration what they take back. The good news is, if you do get in a situation by accident and they take money back, they do readjust your Social Security, so they'll raise it going forward to make up the difference.
Okay.
They count that as a work year, so
they'll penalize you necessarily.
Yeah, I mean it's probably not a loss forever, but again, it depends how long you live. So we always tell everybody that we can tell you exactly when to take Social Security. It's really simple. All you have to do is tell us one little fact, and that is exactly how long you're going to live, because if we know that one factor, we could usually figure it out pretty close. So,
oh my goodness. Do you guys? I mean, like supposedly, what the average male lives to 82. I mean, are those numbers that you actually use in the course of advising clients?
We do. We actually, for financial planning, we usually go 10 years beyond their normal life expectancy, just to get that extra buffer there. But yeah, that's basically what we use to figure out how long they need to hold money and how fast they can spend it and all those kind of good things.
I know I'm beleaguering the seniors, but again, there's a lot here. What about this concept of, you went into a Roth IRA, you pay the taxes early so you don't have to pay the taxes on the return.
Right.
So somehow that would be exempt from taxes as part of that stack.
It is.
Once you start getting your social, right?
Yep. Ultimately, if you do great planning, we have one client that we actually did Roth conversions every year, and we got everything she had is converted to Roth or to non-qualified, and so literally she doesn't, when she does her taxes, she doesn't pay any taxes because she has no taxable income per se.
Gotcha. Okay.
Which is interesting because she has her own home, but she could literally move into low income housing and get rent for almost free because she has no income.
Oh my goodness! Wow.
So so there's a lot of things that come into play there. There's the big difference between taxable income and tax-free income. Tax-free income obviously is good in a lot of ways, and you don't have to pay the taxes, but it also helps you qualify for a lot of other things. So.
Let's. I've got 3 minutes before the bottom of the hour. Let's go right to the younger part of the of your clientele. Let's talk about those teenagers who have the occasional jobs and things. Do they still need a tax preparer?
Well,
I mean, you would say yes, right?
Yeah.
I mean, they certainly can do it themselves, but the other side of that is we see a lot of mistakes made.
Okay.
And don't tell them I said this, but the IRS is not always the easiest people to deal with. So,
I'm thinking of that 16 to 22-year-old. They're in school, but they could make 12, 15 grand a year. That's real money.
Right. The most common mistake we make, and unfortunately it's not easy to fix, is that 14-year-old will file his own taxes, because he made $4,000 or whatever, but he forgets to put on there that his parents are claiming him, and he claims himself. Then the parents come in and file their tax return, and it rejects because they can't claim him because he claimed himself already, and it didn't really do him any good to claim himself, but it does hurt them drastically not to. So
I've seen that multiple times.
Yeah,
I've heard that story.
We run into that one a lot, and you can't.
Wow.
It's not like you can just fix it. You have to do a paper return, and it's going to tie it up for 6 months.
Got to sit down, Johnny, and saying you're not claiming yourself
That's right.
while you living under this roof and eating all of our Doritos. Right? I mean, but that's a huge deal.
And then show them how to fill out the form, because a lot of them don't even mean to. They don't even know they claim themselves. They just didn't check the right box, right?
Anything weird with that too, as far as exemptions right now, or?
No,
or is that all the same?
No, the exemptions, there's still no personal exemption. Now that's supposed to expire next year and go back to the way it was. But we'll see. Now that the Congress has changed, it's probably not. It's probably going to extend what was in there before. So we'll see. But so a child really, you get if they're under 16, you get a child tax credit. And the only thing that's changed there, it's still the same 2,000, but this year more of it's refundable. So I know we've talked about that before, but the difference between a regular credit and a refundable credit is the regular credit will come off your taxes. So if you owe taxes, if you owe $1,000 in taxes and you get a $500 credit, then you get $500 off that, and you only have to pay $500. However, if you don't owe anything in taxes and you get a $500 credit, you just lose it if it's not refundable.
Oh, okay.
If it is refundable, then you would actually get $500 back that you didn't pay in because of the credit. So they're moving more of the child tax credit, of $1,700 of it now, to the refundable level, so that
it's almost like a shot in the arm, isn't it?
Right. Yep.
Quickfill gasoline is made right here in America. United Refining Company, who operates Quickfill, refines its gasoline from North American crude oil in Warren, Pennsylvania. When you buy United Refining Company gasoline at Quickfill, you keep jobs and businesses in America. And you keep American families strong. You don't need to send your money overseas when you buy gasoline. Buy American-made gasoline at Quickfill. Quickfill, driving America.
From baggage claim to pajamas in 10 minutes. Erie International Airport. Fly with ERI.com.
Fly Erie International Airport to Charlotte on American Airlines, your nonstop gateway to the world. Also, we have Breeze Airways flying nonstop to Orlando and Tampa, Florida. Great low-cost carrier providing excellent service to the regional community. Fly Erie International for your travel needs.
Fly with ERI.com.
We're talking taxes. Nothing to be. I ain't scared of no ghosts. Nothing to be scared about with taxes. John Baker, Janie Hill with Kingdom Tax Services. Okay, so we've done the seniors, we've done the little guys. Now let's talk about the great in between here.
Great in between, yeah.
And let's talk about young families with kids. You mentioned child tax credit.
Right.
Anything changing with the child tax credit? And that extension that they had over COVID, that was all pulled back, right?
Yep, that's all been pulled back. It's basically just $2,000 per child now, with the $1,700 of it refundable. So if if that is excess, it'll actually come back to you in a check. But
they literally make that distinction of that $300 is not refundable.
Right. Yep.
Who came up with that idea?
Congress.
I mean, that's just silly. I don't know.
Yeah, I don't know where they come up with this stuff, but who come up with 70.5? I mean, I don't know.
Yes,
but
right.
But no, it's and that's really that group of people in the middle are who the tax laws are written for. They're really typically. I would really encourage that group to make sure they file on time, because usually they get money back. I mean, it's just because of all the credits in that area.
And it goes through 16, right?
It goes through 16.
Which has always kind of bothered me, too, is because your kids are not out of the house until 18. There is something, though, for people that live in your house post 16. Talk about that.
Yeah, I mean, you can claim a dependent, what they call other dependent, for no matter how old they are. They have to live in your house, and they have to earn less than, I think the number this year is 4,800 or something like that. So if they don't earn more than that, so often you can claim parents, for an example, once they're retired and living in your house. And it's $500 per person, so it's not near as big as the other one, but it's not refundable, I believe. So, so that's that it's a little bit. It doesn't add up quite as well, but it's
right.
But it's nice. So yeah, you always want to look for that if there's somebody that you're that's really dependent on you, and a lot of times even if they're getting Social Security, they're still considered dependent on you. So a lot of times a parent can be, and a parent doesn't technically have to live with you, by the way.
Okay.
They can they can still be your dependent, not live with you, as long as you're providing over half their support. So
interesting. The have you seen any mix-ups with this stuff? Where families are not getting all that they should have,
Yeah, I mean, I've seen people, not claim somebody, when they should. I think do
they forget they had a baby,
we've had that happen.
because you can't walk out of the hospital without a Social Security number anymore, right?
At least they forget to tell us they have a baby.
Yeah,
sure, but. Yeah, we've had that happen a few times, but I think probably more so when you have split families where you get into problems. One person thinks they're going to claim him, the other one thinks the other one's going to claim him, or they go back and forth every other year and they forget which year they're in, and so.
Wow.
Yeah, so it's we run into that quite a bit. We had one last year. I think we amended it 3 times before they finally figured out which way they're going to go. But
so generally after the child tax credit is the educational tax credit.
Mm-hmm.
Talk about credits for college or lifelong learning and all that stuff.
Yep, absolutely. If anybody in the family is in higher education, which could be anywhere from a college class to a full boat college education, they definitely want to see if they qualify for a college credit, because they probably do. College credits can be up to $2,500 depending on which one you qualify for, but so they it's a pretty substantial kickback if you have somebody in college.
And it's a credit against your taxes.
It is credit against your taxes, so it comes off your taxes. So
it's good to note that. Room and board does not go towards that. Though.
Okay, right.
Yeah, it's tuition. It's really tuition and anything required by the college. So, like if they require you to buy a computer for the class, then you can count that. If they obviously require you to buy books and that kind of thing, but it has to be required. So, yeah, it's definitely one of the bigger credits, and one that a lot of those middle families do qualify for, certainly.
We've got our headsets on. Let's grab a phone call. Hi, you're live with our tax experts here on Talk Erie.
Very good conversation. I hate to use a word from the past regime, but we need to circle back to the seniors, if we might, for a second.
Sure.
Okay. Listen, I just have a question. I've always wondered this. God willing, I'm going to turn 65 in about 10 days, all right? And I look at my Social Security statement. I've literally been paying into Social Security since I was 14, so over half a century. And I get the fact that, like, okay, 65, you can grab this, and if you wait till you're 67, you can grab even more. And I'm like, well, I hope I make it to 67. I want it now. I don't get it. I believe you said 16. I believe it's about 23,000 they cap you off at. At least that's what I saw. So what's the reasoning behind, hey, listen, you could take the hit, take it early, and by the way, you can't make any more than $23,000 a year on top of that. Well, why is that, do you think? Or do you know? And wouldn't it be actually more beneficial if I wanted to keep working and pay more taxes on the income I'm still working to pay? You know what I'm saying? Yeah. So what was the reasoning? Do you know? Am I missing something here where they say, you know what, if you can retire, but you can't make that much? What's the issue there?
I think it goes back to the roots of the program. Social Security was originally called Old Age Survivor Benefits, and certainly at 65, you wouldn't consider yourself old age, right? So
I do.
Oh, you do.
You do.
Okay, well, for you then.
There's a few things that are older than me: redwoods, rocks.
There you go. But I think that's why they really don't want you to take it until you're into full retirement, and they're pushing that retirement age, that concept, to 67 or 68. So that's why they're trying to push it with it. But yeah, it's unfortunate because you do. I mean, if you're not working, you do want to take it, as early as you can, without having it penalized. But you do have to be careful, the penalization part of it, because that really cuts into it pretty fast. So.
Well, this is a very informative program today, Joel.
Okay.
About time.
Okay, thank you. Appreciate your support.
I love you.
I know.
I'll be listening.
All right, man. Thanks. I've got another question here on the text. Is there a minimum a kid can earn that they don't have to file?
That's a great question. So technically, as long as you're under the standard deduction for a child, you don't have to file. I have to look up that number. You probably have it right there.
I think it's 1,300.
1,300 before they start.
Yeah. So that's if they're not claiming themselves at all. If they're claiming themselves, it's higher than that.
Mm-hmm.
But the probably the bigger factor though is, and this is important to know up front, is did they have any taxes withheld from their paycheck?
Oh, sure, yeah.
If they had taxes withheld, then they're going to have to file just to get it back.
Yeah. See, my kids used to get so irate when no taxes were held, and then they'd have to pay $50.
Yeah.
And that was just drive them nuts, Yeah.
But yeah, we like if it's a part-time, job at school or whatever, we generally recommend going in saying, I'm exempt from taxes because I'm not going to make enough. And that way they don't have to file. Now, unfortunately, in Pennsylvania, you still have to file if you make more than $25. And in the city of Erie, you have to file if you make more than $1. So, so they're going to have to file those returns anyways, even if they don't have to file the federal. But
yeah, and believe me, the city will find you, right?
Even if you don't know anything, they find you.
Yeah, they see.
We didn't get your tax return last year.
Yeah, that's why they outsource it, right? Mm-hmm. What do you got there, Janie?
That's the kiddie tax. Well, that's if you're. That's 1,300. That's if you're, if you're claiming them and they're running one on their own, then it's 1,300. Mm-hmm. If they're too high of income and they're claiming themselves, then of course you get the standard deduction that they can.
And if by chance you have investments with you, the kids could get dinged on the net gain, right?
Yeah. Now that's why they put in the quote unquote kiddie tax, is that you can't. It makes it so you as a parent can't shift your investments to the kids and let them pay the tax on them at a very low rate. Once the kid's income gets above a certain level, it's taxed at the parent's rate regardless. So
let's talk about folks that either have side gigs or full-time gigs, but maybe sole proprietorships, or they're that journeyman plumber or whatever, and they're out there mixing personal income, business income. That gets super dicey, doesn't it?
It does, huh, Janie?
Yes. We like to definitely let them know, if they're going to start a business, make sure they open up a business bank account.
Okay, so that's your number one step, huh?
Probably because I come from banking, too.
Sure, yeah.
But what John says all the time is, if you're going to pay a bill and it's a business bill, but you don't have enough in the business account to pay for it, you'll want to transfer your money from your personal account into your business and then pay the bill still out of the business.
Yeah, we had heard, like with a multi-level marketing kind of thing, like a Mary Kay or whatever. Right. I don't want to pick on anybody, but just having a credit card just for all of your, supplies, like putting everything through the credit card.
Yep.
in and out.
Yeah, you want to separate it as much as possible, and you never want to run one to the other. So you never use a business card for personal or a personal card for business. And the same thing, like as Janie said, you always want to write a check out of the appropriate account, and just move money from one account to the other. That way I can always tell, I can just look at your two accounts and tell you how much you've invested in the business or taken out of the business. And we, won't lose track of expenses either, which we would otherwise. So that's the first thing they need to do. And then they just need to keep, good records, obviously.
Are they more prone to an audit if you're self-employed like that?
I have to tell you, out of 1,200 clients, we've only had 2 audits in 10 years. So
that's insane.
Yeah,
wow.
It's not as high as you might think.
Well, you must be very, very good.
Yeah. Maybe.
What's his phone number? Janie, give the phone number out because people are like, whoa.
814-836-5273.
There you go.
Yeah.
But yeah, I mean, today the audits, what we used to call audits. I think you're probably like most people. When you talk about an IRS audit, you talk about the guy with the big light above your head and asking you questions. Right. But most audits today are actually a letter you get in the mail that says, we looked over your tax return and your employer expenses are too high, or your mileage is too high, or please explain that. So that's really a typical audit today, is just, please explain why this number's what it is. You don't really get too many of the sit-down audits anymore.
They call that a paper audit, right?
Yeah. I think Trump just fired 200 IRS agents, maybe less than that. But yeah, it's typically they can find most things just by doing correspondence now. So
it's just a big misunderstanding.
Yeah. You do have to be you have to be able to justify what your expenses are. I fired more than one client that says, when I got done, they said, "Oh, I owe too much. I'm going to come up with some more expenses." It's like, no.
Yeah.
Yeah. So and you just have to, as preparers, we're responsible to make sure that if you ever get audited, that we can go in there with them and be able to justify everything we put on that paper for you. So
I'm getting some questions about like working for 2 people, or people that do basically under the table type of work. Right. How do you deal with all that?
Well, it's tough. The reality is that I guess we're only responsible for ourselves, and the rule is that if you earn money, you have to report it. Mm-hmm. So if somebody's paying you under the table, then rightfully you still have to report it as income. The problem is
that's even down to babysitting or all that stuff, right? I mean,
yeah. That's why they give the child care credit, because the IRS wants to know who's doing your child care for you to see if they're reporting it. I mean, that's that comes down to integrity, and that's just a matter of doing what's right regardless of whether you can. It's not a question of whether you can get away with it or not; it's whether it's right or not, right? So that's really what it comes down to. You are going to run into those situations where people try to get around it, obviously, but
and the tax rates aren't so onerous that you would it's under the threat of federal law. I mean, my goodness, why would you jeopardize yourself? Right. Some of the other issues, some of the hard issues. Let's talk about people that they just have been in denial and they have not filed for a couple of years, or they just haven't had the money to pay back taxes. What do you do in those situations?
Well, the first thing I like to remind people of is that the penalties are there's different penalties. There's penalties for not filing, and there's penalties for not paying. If somebody can't pay and they just don't file because they know they can't pay, then they're putting themselves in line for 2 penalties.
Like a double
for not penalty and they're much better off to file even if they can't pay, and get the filing done, and that way that penalty goes away, and then they'll get penalized for not paying, and that's pretty much interest. That's not terrible.
And that might even mean if you file an extension and throw some money at what you think might be
Right.
the tax liability, right?
Yeah. And to be honest with you, my experience, the IRS is actually they go out of their way to help you if you're forthright. If you come to them up front and say, "Hey, I can't pay this," they'll put you on a payment plan up to 7 years out. I mean,
and their interest rates are better than the credit cards.
Yeah. So they're they're not that hard to work with. One thing I wish everybody knew that people don't seem to understand is if you know you're going to owe taxes, don't wait till April 15th to file. All right. If you know you're going to owe taxes, you can file your return on February 1st and still not pay the tax. You not owe it. You don't actually have to pay the tax until April 15th.
Gotcha.
Matter of fact, if you put it on your tax return that the IRS can pull it out of your checking account, they will not pull it until April 15th.
Mm-hmm.
So don't put off doing your tax return just because you think you're going to owe money and you don't want to pay it. You're better off to do your tax return very early, and then you know what you have to deal with. It gives you time to come up with the money and all that kind of thing too. But you're not going to have to come up with it until at least April 15th, and then you can go on a payment plan if you need to after that. But
wow. How about let's go on the happy side here. Right. So getting that refund. Mm-hmm. There's such a thing as too big of a refund, isn't there?
There is. Yeah, I mean, it's being the person I am. I can't stand letting somebody use my money for free, but. But
especially with inflation where
it's
right?
inflation where it's at, yeah. So, I mean, anytime you have the government withhold too much and give you a refund, then you're letting them use your money free for a year, with no interest at all. But, I also understand over the years that there are people that's the only way they can save any money up.
Right.
And that's what they have to pay their taxes every year, or their property taxes or something like that every year. So, I guess to each his own if it works, But really, we try with our clients. We try to get it as close as possible. We don't want them to end up owing money, but we also don't want them to get a huge refund back at the end of the year.
And that's your measure of success,
right,
is that
right.
they've been able to use it, invest it, or do whatever,
yep.
not feel so tight all year long if
right.
if it's an overpay.
Yep.
This is interesting. Make the pitch for why a tax preparer is pretty essential in this day and age.
Time. Who has the time?
Really shouldn't be this complicated.
Really,
should
it shouldn't be, no. But the bottom line is, I'm sure many of your listeners could do it themselves, but that would take a lot of time to study the laws and figure out what's changed and do everything. And I've ran into a lot of people that say, well, I'll take it to a tax preparer and then I do it myself for the next 3 years because I just follow their pattern. But the problem is everything changes every year, right? We spend time going to conferences every year just learning what they changed for that year. And so sometimes,
and you have to get the software, all the updates.
Updated, yeah. Software has to be updated, and last year the IRS was still changing things in January. So, that's the hard part. And the other thing that I would tell people is that the IRS only cares if you accurately give them your income, which you're typically going to do because that's on your W-2 or whatever, unless you have your own business, whatever. But if you're just normal W-2 person, you're going to give them that, and that's all they really care about. They will never write back to you and say, "Oh, gee, you should have had a child credit. We're going to send that back to you," or you should have told us about those college costs. So that's a lot of what a preparer does. Is we know what questions to ask to find out what you do and don't have that could qualify for a tax break. Generally speaking, I've had people. I've done this challenge many times. I've had people say, "Well, I do my own." I said, "Well, I'll tell you what. You bring it to me 1 year, and we don't save as much as what you pay for doing it yourself because most of them buy TurboTax or whatever."
Right.
I said, if you don't save enough, then I'll give your money back and you win the bet. But it doesn't happen because there's always something that they're missing.
Yeah.
The other thing too that we provide is kind of being the voice to the IRS. So
sure.
If they get a letter, then they don't have to figure out what to do. They just call us, and I gotta say that is one of my least favorite things to do.
Sure.
Is try to get through to them, but that's probably why they should come to us. So
It's
they
a
don't
value.
have to.
It's a value add that is very important if you're in that predicament.
sure.
You know.
Yeah, the other thing is we have a secure database where we keep all of the documents, all the source documents, all the returns. You think about if you do get audited, typically that's not going to happen for 3 years after you file the return. And if you're like a lot of people, they don't even know where they put that tax return in 3 years from now, or especially the source documents from it, right?
Right. Yeah.
So it's really good if you're in that situation where you get audited to have somebody that can say, okay, let's just reprint all these, and then we're good. So.
Yeah.
So those are the things you really get the value added you get for having somebody do it with you, just in that and keeping up on all of the tax planning part of it that we can do to help you lower your taxes. So
Once again, Kingdom Tax Services. What's the phone number?
814-836-5273.
Our hour is up. Can you believe it?
So much fun,
It's
too.
so much fun. John Baker, Janie Hill. Thank you guys so much. Always appreciate this because I tell you what, we learn so much. Just like Phil was saying, the caller. It's like so much to learn every year.
well, thank you for having us. We appreciate it.
You got it.
Thank you.
You've been listening to The Joel Natale Show, Erie, Pennsylvania's daily podcast from TalkErie.com. Subscribe to our show on your favorite podcatcher and get involved by emailing joel@TalkErie.com.